Let's see what we got going on over here. Alrighty, here we are. Welcome back to this Friday night session. What is this? This is the pre-blizzard session. I'm sure if you live anywhere in the U.S., you're familiar. There's supposed to be a massive blizzard, 6 to 12 inches of snow in Columbus, Ohio. I'm skeptical. But anyway, tonight we're going to take a look at LibreOffice Calc, and we're going to use it to analyze and ultimately wind up forecasting McDonald's stock data for the last 2 years. Okay. Look over here. Over here's our data. So what we're going to do first is allow an update. Alright, so we got weekly dates, which is good. So let's just do a couple of very quick plots. Let's do a 50-day SMA. And a 20. We're not going to do a whole lot of analysis here with this. We're just going to take a quick look at it, okay? The data is coming from so we're looking for F, right? So let's come down here to 51 equal. So it's going to be E2 to E51. Okay. Come back up here to 20 now. It's going to be E2 to E21. So this will be our first stock analysis. Now I don't understand why that doesn't work sometimes. If you know why sometimes it doesn't work, is it because it's too far away from the left-hand column? So I've been working on my forecasting skills, and I will say that the forecast that LibreOffice Calc does is a little bit less conservative. Okay. So there's McDonald's. So let's just do our first plot. Insert plot, line. Okay, so here we go. So here's our initial plot. All right, you can come up here, click over here. Let's say 245. All right. This is kind of nice. Now, the other thing you can do here is, let's say you only want the data from the first from 2020. Let's say we only want the data from, say, for the last 6 months. Okay. All we do is change the minimum for the y-axis, which is the date. Now we got this. So there's our first one. You can see here that here's the closing price, right? 21 day, 50 day, all right? So you can see we had a couple crossover events here. Alright, this is what we're really looking for. Over here, let's move this to the bottom. Okay. Let's change this to 296. Okay. All right. So obviously, what we're looking for is crossover events. You know. So it broke through resistance here. It broke through here. Crossed above. 50. 50 could be a good sign. Kissed the 21-day, bounced down, broke through resistance here, came all the way down below. Now we can see a crossover event, and this is what we're looking for. We're looking for crossover events between the 21 to 50. Now, of course, it doesn't make any sense. How come we're not seeing a crossover event back up here for? Are we going to see a reversal up here or something like that? That's kind of interesting. So let's move this over to our dashboard. Let's make this dashboard a nice dark blue background. Let's make it a green. I don't know what that was. So there's our first plot. Let's do something else also. Let's do a 50-day low, 50-day high and a 50-day low, okay? This is another This is another one you'll see every now and you look out and you'll see, you know, different types of channels. You know, different people use different channels to kind of look at the data. You know, some people even go like 100 moving average, and they'll say, well, you know, as long as it's above the 100 moving average, that's a good sign. So we'll come down here. So the high is D. All right. So we're going to say D2 to D51, okay? Now all we got to do is drag this across, and this should give us the other number then, right, which is E. Yeah, so now we got that's not right, is it? Close. Let's see how this looks. So see, what we're doing is we're trying to create a channel, okay? And come up here to begin with. So we got that. So once again, let's take a look at, well, this would be date. Let's start with this 2025. Okay, that's not too bad. So anyway, again, it's moving averages, and so you're looking for crossover events. So, you know, for crosses, but here, for the most part, McDonald's moves are pretty dramatic. Okay, they're pretty dramatic. I mean, you don't see, when it moves, it moves. Here you can see it touch the 20 low and then bounce back up, so forth. Now, there's an art and a science to interpreting these events. I'm not really going to try to explain that to you. But the okay. Let's see. Okay. So, we got some statistics here. Let's move these over to our dashboard also. All right. And these are some basic statistics. So the average price, selling price is closes 293. The first quartile is 287. The third is 306. And the difference is 19.37. One thing to look at here is the 293 for the mean, and the median, very close, separated by only 4 points, okay? So, you know what, let's do? Let's do a longer moving average, okay? One of my favorites is the 100-day moving average, all right? F. This is one of my favorites. This is also a favorite for investors who aren't really looking to day trade and stuff like that. So let's see what this tells us. Let's start at 245. Okay. Oh, well, this isn't good, is it? Really, my goodness, this is 100 moving average, right? Wow. Of course, it's important to understand that this could be one of these. This could fall into the category of if you want to call it a blue chip stock. One of the reasons you own blue chip stocks is dividends. Okay. Let's just see something here. Okay, here's the dividend history, 24-25. Quarterly dividends that have increased consistently, hokey smoke, for 49 years. Look at this. The fourth quarter 2025 dividend was 185 cents. That's unbelievable. That is absolutely, that's insane. In 2018, the stock was a growing trend, 101 to 116. 2025, my goodness, good grief. That's crazy. I wonder if we can copy this. Copy table. Wow. Who cares about when I'm gonna make sure I gotta read that a second time. McDonald's pays quarterly dividends that has increased consistently for 49 years. That's unbelievable. $1.86. Now, of course, the stock is pretty steep, right? I mean, it's that's crazy. So can we, so let's just see if we can do a quick plot here. Well, there has been some difference in the price. 16. Okay. Well, they have, okay, so it's treating this like it was a date. Okay, so suppose you format this cell. Okay, that's not right. Of course, as always, if you're in the background, by all means, stop by the chat session and say hi, okay? Okay. Goodness gracious. This is so. So this is 1, 2, 3, 4, 5, 6. No wonder the stock is $300, right? God grief. Wow. So McDonald's has paid dividend. What's it say again? McDonald's pays quarterly dividends that has increased consistently for 49 plus years. That's unbelievable. Wow. Wow. That's all I can say is wow. So nonetheless, you can see if you have a weak heart, are you looking for a capital? You're looking for price appreciation. If you're looking for steady stock growth, McDonald's may not be the one you're looking for. Okay, I mean, just look at it. Look at this crazy volatility here, and it's consistent since 2024. Of course, was it? Something happened despite all the ups and downs of the labor market, of fast food going in and out of favor. It's still to keep cranking out those dividends. All right. And I would say it's well, if it goes down, it does bounce back up quite a bit. Okay. Okay. Enough of that fun stuff. Let's move on to our forecast. Let's move on to our forecast and I'll wrap it up. Again, if you're in the background there, stop by the chat section and stay high. Okay, so we're going to do a weekly forecast. Okay. Oh, by the way, I will include a link to this spreadsheet in the description below description and the comments. So if you want to see exactly how it's done, go out and grab the spreadsheet. I will tell you that the data comes from a site called, and there's several places you can get the data. This is Stook, STOOQ.com. Okay. So we go to Insert, Pivot Table, New, Week Start, right? Close, Average. And because the median and the mean is still an average still close, we only go use the average, okay? So here's our data. All right, we got this over here, don't we? Let's just try this. See if this will work. I keep forgetting to get rid of that. Let's try this again. That doesn't look quite right. Insert, Pivot Table, New. What is that? weekly start, close, options, average, so let's try this. This isn't quite perfect, but so come back up here now. It's interesting to note that LibreOffice Calc 1 is a little bit more, isn't quite as conservative in the forecast. It also uses what's called a price interval, which I believe sort of gives some idea of what there's a 95% chance that the actual price will fall within the range, which you'll see in a moment here. So here's lower, and upper. So we come over here now, take a look at their settings, okay? We select the starting forecast area, okay? Then you just do all the values, all the dates. Then for these here, we're just throwing all ones, okay? For the what? For the predictive interval, or the price interval, same thing, start, value, date. The only difference is you set the confidence interval, okay? And the rest is just 3 ones, all right? So, what about our shouldn't make any difference where I put this. Oh, what it does. Let's do our first forecast here. Okay, let's just drop this. Insert chart, line, okay. Let's move this to the bottom and come up here and adjust our y-axis. So now you can see the overall forecast. Oh, I forgot to mention something very important, okay? Very important. And that is, this video is for educational purposes only. It's not for financial investment or trading advice, okay? So, a couple quick notes. Like I said, if we did this with Excel, we'd probably get more of a straight line, okay? But for whatever reason, which I actually kind of like the forecast here with the forecast here with. I actually kind of prefer the LibreOffice Calc forecast because it is a little more adventurous. So basically, it's predicting a downward trend over the next 30 days, over the next 6 weeks. No, 3 months and a quarter. This is the first quarter forecast. So this is a 12-week forecast. So it's saying the price is actually going to decline over the next 4 weeks. Over the next 12 weeks, right? Let's move this to our dashboard then. Now, of course, it goes without saying that ETS is not optimized for stock forecasting, so it's kind of just fun to look at and see what happens over the next weeks. Okay, and my plan is to come back and I'll update this next Friday. We'll update our plots. Okay, so come back over here now. The values are B. Right? And our stat number is this right here. Okay. So let's just try this the old-fashioned way. I will give you a heads up when I ran the statistics on this plot earlier today. It said it looked pretty good. Except for it said overall, the forecast using the weekly average looked really good. Over here then. Again, it's important to note that this is what's called a predictive interval. Prediction interval at a specified target value for additive exponential smoothing methods. Not a confidence interval. So this is a little different, okay? Target is this. Values is this. timeline. Confidence interval. Now we're doing the wrong thing, aren't we? What we want to do is the statistics. That's what we want to do. And that's just down here. So our values are our existing numbers. Statistic type is this. Period length 1. Oh, there we go. So now we're going to come over here. Okay. Right, so the G4 is this value here. Let's come over here and let's take a look at what I saw earlier today. So here's the thing. For McDonald's, using weekly average close, the stats are actually quite solid, with one caveat. What's the caveat? The caveat. Beta 1 plus beta 0 is aggressive trend 0 seasonality. That's not wrong, but it can mean that the model only may over extrapolate recent trend changes. Sharp reversals, earnings, stocks, market sell-off can't be anticipated. Overall verdict. I'll rate this 8 out of 10 for weekly price forecasting. Errors are tight, smoothing good choice is good. Let's see. Do one comparison run. Force beta. Interesting. Best in Calc, remove or dampen the trend. Interesting. If we come over here, I don't actually remember seeing I'm actually going to leave it just the way it is. Okay? Let's go back and do a quick review here. We got some summary statistics here. You know what let's do? Let's also move our stats over there also. I'm actually going to do a copy. That didn't work, did it? Alright, there we go. Okay, so we start out with a 50 and 20 moving average. That's the closing price. We can see we got a crossover here. The 20-day crosses underneath the 50, which could promise a downtrend in the next few days. The channel, lots of movement above and below the channel line, not a lot of action in between. Dividends since 2018, for 49 straight years, McDonald's dividends has increased. Okay, 100-day moving average again. We had some happy times when it's above moving average. We also had a lot of time when it's below the moving average. Okay, 100-day moving average. Our forecast is possible downward trend for the first quarter. So there's a chance that the price could continue trend downward for the first quarter this year, but that's not unusual because you see a lot of volatility in McDonald's stocks, don't we? Okay, so there you have it. Brief stock analysis and forecast for McDonald's. Okay.